One of the biggest corporations in the world based on the sheer quantity of derivatives they hold is Deutsche Bank. In the event that their stock began to sink and the company's performance started to slow down, it would put everything at risk. Germany could never bail out this bank because it's bigger than all of Europe. The ECB couldn't do it either without causing hyperinflation. Isn't it interesting that their stock is near record low and their performance is sinking faster than their stock? What will they do? You came here for the truth, so let me unveil that for you. Today we are going to look at Deutsche Bank. I'm going to talk about their stock itself. I'm going to talk about the performance. I'm going to show you about this new bad bank that is being created. I'm going to show you how much of the derivatives they have according to their official books. That's it. Let's get into it. First, I wanted to start with the stock itself. You can see it's around €6. It is near a record low at this time. We have watched this stock going down further and further and further. It doesn't seem to stop. They bring in a new CEO. The stock continues to fall further. There's a lot going on here that is not disclosed to the public, and I'm going to show you some of that today. I'm sure you're aware, even if you're not on this channel, Deutsche Bank and Commerzbank merger talks collapsed. They were going to try to squeeze these two companies together and create a super bank. That fell through, so now they are looking for other options. Both of these banks have their own issues, and bringing them together was supposed to be a good thing because they could fire a whole bunch of people, save money that way, but that didn't work out, at least not at this time, so they're going through other avenues. This is Deutsche Bank's annual report. This gives us the numbers as of the end of 2018. That's the newest ones I could find. This is directly from Deutsche Bank's own website, so we know that the source is legitimate. This is where they show you all the derivatives. If you go all the way to the bottom, you will see right here $43 trillion worth of derivatives are with Deutsche Bank at this time. I do believe that they have less now than they did previously. However, this amount here of €43 trillion worth is bigger than Europe. It's bigger than Germany. It's bigger than what the ECB can take care of. And it shows you here that there is no way out of this should they start to have a problem. And guess what? Their stock is having a problem, and the performance of the actual company has been sinking faster than their stock. That doesn't look good for the future of Deutsche Bank, and understand all of these derivatives, how they're connected to this company, and all of the other financial establishments that have investments with Deutsche Bank and how they could feel the ripple effect. According to the Financial Times, Deutsche Bank to set up a €50 billion bad bank. That's their words, not mine. Deutsche Bank is planning to overhaul its trading operations by creating a, quote, bad bank to hold tens of billions of euros of assets and shrinking or shutting its US equity and trading businesses. Right away, this looks bad for a lot of those in the financial industry who are working for Deutsche Bank in the United States, as well as the fact that this bad bank isn't going to work. They've been trying these type of schemes before, and it never seems to resolve anything. They will use the word restructuring, and I'll show you more about that in a moment. The bad bank would house or sell assets valued at up to €50 billion and compromise mainly long-dated derivatives. They're trying to make some changes within their company, but of course this will not resolve the underlying issues. We are now 10 years out from the crisis, and supposedly everything had been resolved, but you see that inherently there are problems here that have not been accounted for, and certainly it is more apparent in Europe than it is in the United States today. As part of the restructuring, the lender's equity and rates trading units outside continental Europe will be shrunk or closed entirely. So this is what I was talking about, how you're going to see job losses as a result of this. This is very typical. Whether there's a merger, whether they're having problems, they're always trying to fire people. This is what they do. You see it time and time again. Many of these corporations will appease the shareholders simply by getting rid of a lot of people. That gets rid of the overhead, so they are very happy to see that occur. Doesn't matter that thousands of people may lose their jobs. It's all about profit. Corporate profit is number one, and it's not just Deutsche Bank. It's not just financial companies. This goes for any of these publicly traded companies. If you get rid of a lot of people, the shareholders are happy. Back in 2018, there was this report. Deutsche Bank has a €60 billion problem, but doesn't want to talk about it. I'll touch on a few points from it right now. Deutsche Bank's previous CEO came clean about a 60 billion euro portfolio of years-old trades that were costing the German lender about 500 million a year. These were never previously disclosed. They said they were cleaning everything up, but some of these were over a decade old. The silence surrounding the 60 billion euro epitomizes the bank's struggle to regain the trust of investors after many years trying to fix its problems. We'll talk more about this further down. Despite numerous supposed cleanups, they were still carrying a large amount of trades generated before the crisis that had long ago ceased to generate returns. In many cases, supposed profits have been booked up front, bonuses paid, only for the trades to turn loss-making at a later date. Something fishy is really going on at Deutsche Bank. I don't think it's necessarily just corruption. We have something bigger going on. It wouldn't surprise me to know that this bank has already failed and people internally are starting to slowly find out about it. The stock is just taking a nosedive and these mergers are failing simply because they know what's going on. In the end, we may not really find out what the details are, but if we can get any little tidbits, that would certainly be applicable here, and I'm going to continue digging up Deutsche Bank information for you. There's some more at the end here, but I think you get the point. Basically, what we are dealing with right now is this massive corporation that, as I said, is bigger than Europe. It's bigger than what Germany can handle. It's bigger than the ECB. And we've allowed corporations to get so massive, they are literally too big to bail and too big to fail. The next crisis, which is inevitable, there always will be crises, we are going to encounter something that governments are unable to deal with. In the previous cycle, 2008, corporations were bailed out by governments. This time, it's the governments that will need the bailing out. We are in for one hell of a predicament. I'm not sure what they're going to do. I really don't know by what mechanism they are going to be able to bail out a situation like this. There is just too much going on and it will be very, very brutal for those who are unprepared. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a like on this video, you're supporting me and this channel, so I do appreciate that very much. If you want the financial education you were not taught in school, these two books have everything that you need. I talk about the financial system. I talk about how money is initially created. I talk about central banks and interest rates and everything that you need to know. So check it out at the link in the description. If you want the audiobook, that's available at themoneygps.com. Wait a second, hang on, don't go anywhere. If you want to know more, then definitely watch this video. It will be of interest to you. Click on it and I will see you there.